Hey, what up, YouTube? How you live? How you living? It's your boy, the Stock Dude, back on the prowl again. In this video, I got two long-term plays that you can put in your portfolio to help give your portfolio the support that it needs to bring you huge gains in the future. Now, these two, you can just throw them in your portfolio and hold them for the long haul. First one on the list goes by the name of ChargePoint Holdings Incorporated, ticker symbol CHPT, coming in at a price of $21.31 per share. Now, ChargePoint Holdings Incorporated provides electric vehicle charging networks and charging solutions in the United States. It offers a portfolio of hardware, software, and also services for commercial, fleet, and residential customers. Now, the company was founded back in 2007 and is headquartered in Campbell, California. ChargePoint, that's the largest charging network in the world. Now, with so many EVs, electric vehicles, expected to be on the road in the near future, you can own something that each one of the millions of electric vehicles coming to the market will eventually need, and that is power. No EV can move if it does not have a battery that has power. Now, by the year 2030, China says that 40% of the cars that they manufacture will be electric. I'll say that again. By the year 2030, China says that 40% of the cars that they manufacture will be electric. So ChargePoint is a long-term play to support your portfolio. Now, let us go to a Z chart. Like I always do, first thing I do is I train my eyes on the bottom of the chart. Looking at the bottom of this chart, it shows me that on Friday, ChargePoint had above average volume of shares bought and or sold. The average volume of shares bought is right around 7.8 million on the average day bought and or sold. But on Friday, ChargePoint had 11.5 million shares bought and or sold. So that lets me know that people are starting to accumulate shares of ChargePoint. And I'm looking at this on finviz.com, my favorite website to break down stocks and look at charts. And what it has on the bottom of this chart is very interesting. This is what they call a multiple bottom formation. Now, what that means is that stock prices come down to a support level and bounce off of it multiple times at or near the same price point. As you see right here, back in March, it came down to around $20 a share, bounced off, went up, came down and tested that area of support, and it held, which means it didn't go lower than that $20 mark. That's twice. Looking right here, it did it 3 times, it did it 4 times. Each time it bounces and goes higher. Right here again, it hits again right here at the midpoint of September for the 6th time. So 6 times since March, ChargePoint has came back to this area of support right around the $20 mark. Now, this multiple bottom area is very powerful. It seems to be holding up just well. So if I were you, and I'm not, and this is not financial advice, but if I were you, I would pay attention to ChargePoint and try to buy ChargePoint between $20 a share up to $21 a share and just wait for this thing to go higher. So that's my advice to you. Put ChargePoint on your watch list and do your own due diligence and do your own research, but keep an eye out for ChargePoint, because without EVs having power, guess what? They ain't gonna move. EV's not going anywhere with a dead battery. And ChargePoint is the largest battery charging stations in the world. Stock number 2 goes by the name of J Frog Limited, ticker symbol FROG. Frog. Who would have ever thought? J Frog Limited provides developmental ops platforms to achieve continuous software release management platforms, enabling organizations to deliver software updates across any system in the United States. Its platform acts as a bridge between software development and deployment, which enables organizations to build and release software faster and more securely. JFrog Limited is a TIPS rank strong buy stock. This is a high-tech, high-growth software management company. Now, back in August, they had a negative earnings report, which caused the stock price to decline 12% in a single day. Now, the earnings report came back negatively because they noted that they were slowing down as far as production and as far as growth within the company. Now, to be honest, that slowdown part is nothing that's relegated only to this company, because during the pandemic, guess what? All the companies are slowing down because the whole world is slowing down due to the pandemic. So when it comes to trading stocks, I trade what I see more than what I hear, because you hear a lot of negative things. But let us go to a Z chart, because Z chart will tell you what people are doing. Sometimes people are doing things that they're not talking about, and this chart will explain exactly what I mean. JFrog Limited, ticker symbol FROG, frog. Same thing. I go to the bottom of the screen and I look at my average volume. Average volume for this stock, shares bought and or sold on any particular day, is 909,000. But on Friday, they had over 1.1 million shares bought and or sold. Looking at the bottom of the screen, this is in what's known as a double bottom formation, which means that the stock price came down to its lowest point right around the $33.46 mark, bounced up, hit resistance, and came back down a second time right around the exact same price, around $35.08. So right now, JFrog is trading at $36.78 per share. If I were you, which I am not, because this is not financial advice and I am not a financial advisor. But if I were you, and if I were to suggest that you do something, I would suggest that you try your best to buy shares of JFrog Limited at the $35 mark, because what's going to happen is going to go higher. Now, this is a high-tech, high-growth software management company. Once again, I trade what I see and not what I hear, because I'm seeing that they have price targets between $50 and $55 per share. So wait for that pullback, try to scoop up some shares around $35 or so, and more than likely this stock will probably consolidate between the price of $40 down to $35 per share, and it'll probably bounce around and consolidate in that area, not going much higher than $40 and not going much lower than $35 per share. It'll probably do that for the next few months. So guess what? That gives you and that gives me more time to scrape our pennies to the middle of the table and buy some shares of JFrog Limited, an excellent long-term play to support your portfolio's growth moving forward. I'm one known as a stock dude, and I'm gonna holler at you later. Peace.